gentlemen, good day and welcome to the Borosil Renewables Q3 FY2024 earnings conference call hosted by Axis Capital Limited. As a reminder, all participants' line will be in the listen-only mode and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Jitin Rishi from Axis Capital. Thank you and over to you, sir.
Thank you, Manuja. Good evening, everyone. On behalf of Axis Capital, I am pleased to welcome you all for the Q3 and 9 months FY24 earnings conference call of Borosil Renewables Limited. We have with us the management team represented by Mr. P.K. Kheruka, Executive Chairman, Mr. Ashok Jain, Whole-Time Director, Mr. Sunil Roongta, Chief Financial Officer, and Mr. Swapnil Walij, Head Marketing. We will begin with the opening remarks from the management, followed by interactive Q&A session. Thank you and over to you, sir.
Thank you. Good afternoon and welcome to the Borosil Renewables Q3 Financial Year 24 investor call. The board of Borosil Renewables on 7th February approved the company's financial results for the third quarter of the current financial year. Our results and an updated presentation have been sent to the stock exchanges and have also been uploaded on the company's website. We will discuss the operations of Borosil Renewables on a standalone basis as well as on consolidated basis. During the third quarter of the current financial year, the company recorded standalone net revenue from operations of Indian rupees 240.7 crores, representing an increase of 94% on a quantitative basis as a result of commissioning of a new 550 tons per day new plant SG3 from 23rd February 2023. Sadly, the dampening effect of a reduced sales price restricted the revenue increase to just 49%. Export sales during the third quarter of this financial year were rupees 19.1 crores, comprising 8% of the turnover and also registering a decrease of 67% over the same quarter last year. Average ex-factory selling prices during the quarter were about 102.4 rupees per millimeter as compared to 134.3 rupees per millimeter in the corresponding quarter in the previous financial year, a sharp decline of 23.8%, thereby causing a steep erosion in the margins. The domestic selling prices continue to remain low after discontinuation of anti-dumping duty against China in August 2022 as a result of dumping from China, Vietnam, Malaysia, despite rise in the input prices. On a sequential basis, the average selling prices during the quarter show a decline of 7% over the preceding quarter as the dumping continued unabated and intensified, taking its toll on a declined export share. EBITDA during the current quarter was rupees 22.7 crores, corresponding to a margin of 9.4%, which was a steep decline as compared to an EBITDA margin of 26.7% in the same period last year, when the EBITDA amount was rupees 43.1 crores, reflecting the impact of a 23.8% decline in the average selling prices. As a consequence of dumping of solar glass and absence of a level playing field against imports, the company recorded a loss before tax of rupees 15.4 crores as against a profit before tax of rupees 30.1 crores in the same quarter last year. The decline in profitability was due to lower EBITDA and a higher interest depreciation as a result of capacity expansion in February 2023. For the 9 months ended December 2023, the company clocked a revenue of rupees 758.6 crores, a growth of 52% over the similar period in the previous year. The company earned an EBITDA of rupees 105.8 crores, a margin of 13.9%. However, at the net level, the company suffered a loss before tax of rupees 3.8 crores due to lower margins and higher interest depreciation costs. The exemption from payment of import duty of solar glass, which was set to end on 31st March 2024, has been extended till 30th September 2024. This has left the industry bewildered and disappointed. The solar glass imports continue to remain completely exempt from payment of any sort of import duty post discontinuation of anti-dumping duty against China in August 2022. The application requesting imposition of anti-dumping duty on dumped imports from China and Vietnam has been filed with the authorities. This will be taken up in due course, and they may take at least 6 months to get any final decision from the authorities. In the meantime, the local industry will be forced to continue facing unrealistically low import prices. While ALMM mechanism remains suspended, keeping the door open for unrestrained imports of solar modules, leading to a decline of 60% in prices of solar modules, no significant jump in solar installations has been seen thus far. The solar installations in the current financial year for the 9 months were merely 6.5 gigawatts against 9.3 gigawatts achieved during the same period last year, when we had achieved 12.6 gigawatts for the full year, 2023. The overall demand for solar glass, albeit at a reduced price, remains much larger than domestic production so far. With increased domestic availability of solar glass from new plants, this will go to meet the demand. It is essential to bring back the ALMM mechanism from 1st April 2024 in order to have a continued robust demand for solar glass. The government has announced setting up of rooftop solar over 1 crore houses in the next 1 year under Suryodaya Yojana, with a promise to provide free electricity up to 300 units to the household and a provision to sell the surplus power to the grid. This will give much required fillip to the rooftop solar program and generate demand for solar modules. It is expected that this policy will specify the use of domestically manufactured modules, but there is no clarity as yet. This would generate demand for solar glass. I will now discuss about the German operations. The solar glass manufacturing furnace in Germany was operating during the second quarter of the current financial year at almost 85%, and the operational performance had started to improve. However, the European solar module manufacturing started to suffer a serious setback as unbridled imports of Chinese solar modules in Europe at dumped prices by the end of the second quarter of this financial year has severely impacted the ability of local producers to achieve sales as mentioned by me in the previous earnings call. Now, during the current quarter, all the major players have severely curtailed their operations and cancelled their orders on GMB for the third quarter and fourth quarter of the current year. Also, they are unable to confirm any orders for the next year in view of uncertain situation. The solar PV industry in Germany has sought immediate intervention from the European Commission and German government, as is expected that some concrete measures to safeguard the local production will be announced by the end of February. It is sufficient if the sufficient measures are not announced. There is a possibility of large manufacturers discontinuing their operations from 1st April in case there is no support coming from the government. In the meantime, the plant at GMB is operating only about 55 to 60% production in view of low demand in Europe. Certain cost optimization steps have been taken to contain the negative impact of lower capacity utilization and lower sales realization. Now I come to the consolidated results for the quarter, which include the operations of the subsidiaries abroad. The overseas subsidiaries, including those step-down subsidiaries, has generated net revenue of 89.4 crores and EBITDA of 1.4 crores. And the consolidated net revenue and EBITDA for the third quarter for the current quarter stands at rupees 330 crores and 24.1 crores respectively. We continue to maintain a positive outlook on the sector in view of expected growth in the domestic manufacturing in India. The new large capacities expansion has started to come into production, and more are expected in the next 2 years, which will further increase the demand for solar glass. However, sustenance and growth of solar glass manufacturing in India will depend largely upon the levy of duties on imports of solar glass. The position in other important markets was as under. In Turkey, the market continues to show weak demand as the economy faces increased challenges arising from continued high inflation and very high interest rates. The customers are operating at significantly lower levels. Demand in US is yet to pick up. We expect a greater demand from USA towards the end of 2024 as the local production of modules starts to pick up. In view of low demand from Europe and Turkey, which are our major overseas markets, exports from India have suffered serious decline. We have increased our sales in the domestic market, which unfortunately is at very low prices in view of continued Chinese dumping. This is affecting our average sales realization. We are constantly trying to improve the performance by increasing productivity and controlling costs. Over the next few months, we expect to take further steps on setting up an additional solar plus wind hybrid power plant, which is expected to further cut costs and allow us to use a major portion of the power by captive sources of renewable energy. In order to strengthen its balance sheet and financials, the company has decided to raise funds up to 500 crores. The board has approved raising of funds through the issuance of instruments or security, including equity shares or any other security convertible into equity shares, including warrants, by way of one or more offerings, including a rights issue and or preferential issue and or QIP, or through a combination thereof, in one or more tranches for an amount not exceeding rupees 500 crores. In accordance with the regulations and subject to necessary approvals, including the approval of the members of the company and such other regulatory and statutory approvals as may be required and also approved, constitution of a committee of the board of directors of the company for dealing with all matters pertaining to the proposed fund issue. The funds will be utilized for reduction of debt at both the company's level and at subsidiaries and general corporate purposes. With that, I would now like to open the floor to questions that you may have. Thank you.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking the question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Nikhil Abhyankar from ICICI Securities. Please go ahead.
Thank you, sir. Thanks for the opportunity. The first question was regarding the delay in removing the BCD exemption. So, what exactly can be the reason for it? Is it that it was just a vote on account and not a full-fledged budget that it did not get removed? So, just can you throw some color on that? And how confident are we that it will be brought back again after September 24th?
So I think we clearly do not have any communication that why it has not been levied or the exemption has been extended. But we should understand that this was vote on account and not the full budget. and all the exemptions which were supposed to have a set-off sunset have been extended. So it is not a single case where the solar glass basic custom duty has not been introduced, but it is for all the products which were to have sunset. So we expect that some decision may be taken by the government in due course at the time of presentation of final budget, or maybe closer to the end of September when this deadline ends.
Okay, understood. And sir, regarding the fundraise of 500 crores, what exactly is the purpose, sir? Will it just be for debt reduction, because we have already put on hold our expansion plan? So are we thinking of expanding again, bringing that plan back to work?
No, as of now, the purpose is clearly identified as a reduction of debt, because the company has taken debt for its own expansion in India as well as abroad for our subsidiary. So the idea is to reduce the debt levels.
Okay, understood. And so one of the large IPP players who had won PLI under solar manufacturing recently announced that they might not go ahead with their plans. So due to the low module prices, so how do you see this trend? Is it like there are many players who are thinking something like this, or can you just throw some light on that?
Other people have generally gone for expansion, and large players like Renewables and others have gone for expansion, and also Reliance is probably going for a large plant itself. Adani also has gone. So we believe that most players are going ahead with the expansion. But yes, some people might feel that there is some challenge in the margins, or the margins are not right because of the low prices of modules, and they may decide as per their own understanding whether to go for expansion or not. But whatever expansions are taking place, they are quite sufficient in terms of the glass demand for glass production in the country.
Okay, sir. Understood. That's all from my side. Thank you.
Thank you very much. The next question is from the line of Sherin Nandikur, an individual investor. Please go ahead.
Yeah, thanks for the opportunity. Sir, in the last call, you mentioned that even you are exploring the expansion or any acquisition plans in the US or any other region apart from India and Germany. And also US government is also planning to put on restrictions on Chinese import. So are you still exploring that opportunity in the US?
No, I do not think at this juncture, when the profitability of Indian operations is not very robust, and also because things are not very clear as regards the manufacturing in USA, we will rather depend on exporting from India instead of setting up any facility there.
Okay. And regarding the recent announcement of Suryodaya scheme, any update on that? Like, is it only all the components must be used in that scheme which are manufactured in India, or it can be imported as well from the China?
So while we are still seeking that clarity, but generally wherever there is a subsidy involved from the government wants the component or the modules to be used for production from India. So like say Kusum scheme, which is for farmers, the modules have to be used from Indian production. So similarly, this is another scheme where it is a subsidized program. So we believe that it is likely to be a local production of modules, and once the local production modules take place, we will have glass demand for that. So, but this is yet to be clarified.
And not just module. If you say module, that includes the glass as well, right?
No, for glass there is no mandate for the use of local glass production, but it is only at the module level or at the most at the solar cell level. But other components could be locally sourced or imported depending on the pricing or availability and all factors. But yes, there will be demand. Demand will get generated if the modules have to be made from India.
The margin and improve the profitability in a couple of quarters till the anti-dumping duty is applied in September month?
So we are working on whatever cost optimization and production efficiencies improvements can take place in the company. But besides that, there are no major significant drivers for increasing any margins in the short term up to September, by which time the BCD or anti-dumping duty should get certain view. Whether it happens or doesn't happen will be a process, but the chances are that by September we will know by September that whether anti-dumping duty can happen or not.
Okay, even Suryodaya scheme will not help much until they put the anti-dumping duty or BCD.
Yeah, on the demand front, it will increase the demand if it is the modules to be made in India. But on the pricing front, it doesn't impact much because
unless the government decides to include glass in the domestic content requirement under the scheme.
Okay. Are you pushing for that, or you are just waiting for government to decide on that point for the inclusion of solar glass also in the scheme?
Yes, we are definitely pushing for it.
Okay. Yeah, I request whenever you have that update on whether the glass will be included in the scheme or not, please make an update announcement in the BSC.
Certainly.
Help us to know. Yeah.
Sure. Certainly.
Okay. I think that's all from my side, sir. Thank you very much. I appreciate your time and all the best.
Thank you so much.
Thank you very much. The next question is from the line of Praful Bhojak from Perficient Advisors. Please go ahead. He got disconnected. The next question is from the line of Kushagra from Old Bridge Asset Management. Please go ahead.
Yeah, hi. Thanks for the opportunity. Just two questions. One, from policy perspective, if I have to understand, are there any positives, if you have to put your case to the government, because all the incentives, duties are there on solar modules and nothing on solar glass. It's the solar glass which goes as one of the parts in the solar module. So, the lower the cost of solar glass would probably help solar module manufacturers. So, in your case, it's basically your customers as well as government subsidies and policies all looks in favor of no duties on solar glass. So, in that sort of a scenario, how would you deal, and are there any positives to put or to sort of turn government towards, introducing some sort of a duty on Chinese imports or Chinese dumping?
So one is the anti-dumping mechanism, which is basically relief or remedy available under the law, where the dumping is restricted by the putting anti-dumping duties. Now here the question of whether the solar modules will become costlier or does not become costlier is not arising, because it's a level playing field provided under the law, under the international laws. Another case is regarding the basic custom duty. Now when we import glass into India, or like our customers import glass into India, there is no duty. Whereas if we export glass to China, there is a 21% duty. So Chinese have, increased their production capabilities and capacities by imposing restrictions. Whereas in case of India, we are staying away from it. Now, unless we create certain situation in which the glass industry can become economically prosperous and creates a capacity which is world class in that sense, their costs will not get optimized. So it's a chicken and egg situation that you impose duties and you don't impose duties and ask the industry to come up. That's not going to happen, because unless there is a sufficient return on equity or return on investment, nobody will put the money. So, and the supply chain, creating a supply chain locally is of very utmost importance in this sector, because it's the energy sector. And anything which China does to reverse their, say, export or to India or change in their policies can put into jeopardy the entire solarization program of the country. So government has to take a stand that to create a local capacity in solar glass, which is a very important part of the solar value chain, there may be some pain in the cost. And the pain is not very high, because the solar glass in solar module is a very small percentage, and the cost of increase in power price by levying certain duty on solar glass is hardly 1 paisa or 2 paisa in a power cost of 2 rupees 50 paisa or 2 rupees 60 paisa which the bidders are bidding. So this is a call which government will have to take, whether that is possible to absorb or not possible to absorb, and whether the duty should be levied on solar glass or not. But we are continuously pursuing with the government, and we had positive indications that BCD exemption will be withdrawn, not from one but both the ministries which are concerned to the manufacturing as well as power sector. But somehow this exemption has been extended for all the products for next 6 months. We'll have to see whether by September we are able to get this BCD or not.
Fair point, sir. That's very well explained. And just a second question on the domestic capacities. If I remember, Reliance is putting some capacities, and then there are 3-4 other players as well. If you can give some context to the quantum of the players, the quantum of the capacities, and are there any additions in the number of players or reductions in the number of players considering the current environment who are putting up solar glass capacity?
5 players in action today, and the 6th one is on the cards. In another 4 or 5 months, he'll come into production. So, as against 1,000 tons per day that Borosil is doing, we have about 1,300 tons already extra, and another 300 tons coming up. So, altogether, India will have a capacity of 2,600 tons, which will be nearly balancing the quantum of modules that are expected to be made in India. So now there's no capacity constraint, and we have a large enough industry with 5 to 6 players. Reliance would be on top of that. So if Reliance comes up, they are another 2,000 tons per day. We believe that they're going to do. So that will mean a lot of glass in the country, and the government, I think, would not really want to shut their eyes to this situation.
All right, sir. Thank you, and all the best.
Thank you very much. A reminder to all the participants, you may press star and 1 to ask a question. Next question is from the line of Jalaj from Swan Investment. Please go ahead.
Yes, am I audible?
Yes, sir.
Yes, thanks for the opportunity. So I had first question with regards to the exports to the US markets. So what I understand is a lot of Indian players are right now, at least the module manufacturers are exporting to the US market. Is it because why are we not the present there? Is it because the Chinese players there have the anti-dumping on the module part and it's not on the glasses? And what sort of glasses are those guys otherwise using?
So Indian exports are, yes, going to USA because the prices in USA are much better compared to other parts of the world. And the Chinese are facing a problem there because they are using the equipment or the components from restricted areas. So for them it is becoming difficult to prove that they are not using those items. And a lot of times the goods are held at customs and all. So there is a preference given to products coming from India. In terms of the duty structure, there is, on the glass and all, there is no duty from on the exports from India. I think it's about 5%. But in the case of Chinese, there is an anti-dumping duty in USA, which is currently on hold. They have suspended the anti-dumping duty in USA. All said and done, the manufacturing activity in USA is low. Module manufacturing activity. They are depending on imports from, say, Chinese or South Asian countries as well as India currently. Under the IRA program which they have come out with, a lot of manufacturing activities are supposed to start in this calendar year, which will increase the local demand for glass. And we are looking at that market. We are already supplying to few customers, but very small quantities. And in future, we expect that to be a bigger market for us.
Okay. So just a follow-up on that. So we have better realizations from the glass which is being sold in US versus in India?
Well, USA also is a very competitive market, but realization is better than India. It is, however, less than the European or other markets. But the market is attractive. Market will become attractive once the manufacturing starts. Currently, there is no meaningful export from India of glass.
Okay. And one last question. So the modules which have been imported from China to the US have anti-dumping duty as of now, or there is nothing on them also?
Currently, there is nothing on them.
No, the restriction relates to the origin of any item in that from the Xinjiang province. So currently, the importer has to prove that the entire module, nothing is coming from Xinjiang province, which they have declared that Xinjiang province is using slave labor. So therefore, they are not permitting any product which might have had its origin in Xinjiang province from entering the USA. Even if it is a small part of the whole module, it will be seized. And they have a lot of modules which have been seized by US Customs and lying in the customs warehouses.
Okay. And with regards to the capacity for the glasses, if I were to compare it domestically, you covered it well that Reliance and other peers are coming up. But worldwide, if we were to check the capacity, what is the situation right now vis-a-vis the supply and demand, and considering both China and US also and Europe?
So in US, there is no solar glass production as of now. In Europe, we are the only one producing. And India now we have 5 players, and 6th one will be coming. So besides the Chinese, these are the only plants for producing solar glass. So Chinese are controlling almost 97% of the world solar glass production. And between, say, China, Vietnam and Malaysia, they have some plants in Vietnam and Malaysia. So that's all Chinese plant. So most glass production is controlled by Chinese.
Got it. Thanks a lot and best of luck.
Thank you very much. Ladies and gentlemen, you may press star and 1 to ask a question. The next question is from the line of Sanskriti Mishra, an individual investor. Please go ahead.
Hello, sir. So my question was that currently, what is the market size of solar glass in India, and how much is it expected to grow by FY28? And what could be the reasons for the same?
So from the data available, what we see is that the total demand for solar glass in India is at about 2,500 to 2,600 ton per day of net glass, and this we expect to double in next 3 years' time. Now,
sorry, I missed your.
It will be led by higher module manufacturing activity, which is continuously increasing because a lot of module plants are coming, and India needs to install say almost 25 to 30 gigawatts every year. Currently, we are only at a run rate of 12 gigawatts to 13 gigawatts. So this consumption of glass and production of modules will increase in due course, which will increase the demand to almost double. This figure is outside of the requirement for hydrogen, because that sector we are not including in the solar glass requirement as of now. So 5,000 ton per day should be demand alone for the solar power sector, solar PV sector.
Right. So got it. And so, what is the demand for solar glass if we compare domestic versus the imports?
So domestic is about 35% as of now, but it will go up because the domestic production of the last recent plants has just begun in last quarter, and they are still ramping up their capacity. So it might become 50% or 55% in next 1 year or so.
Understood. And so, with respect to the capacity utilization of various solar glass manufacturers, what could be that figure approximately?
So for us it is almost 95%, but for the new players it is gradually going up. So we do not have individual data for all the manufacturers, but I think they may be running at close to 50% to 60% of their capacity as of now.
Got it. And so with respect to, just last question, with respect to the solar module demand that is there in India, what could that be approximately?
So well, from the glass consumption, what we understand is that the module production is close to 17-18 gigawatt per annum, and our part of this is getting exported, maybe 4-5 gigawatts. So consumption in India may be about 13 to 14 gigawatts.
13 to 14, got it. And the current market size of solar glass that you've told is 5,000 TPD at the moment in India, which is expected to grow.
Current is 2,600 ton almost, and in 2-3 years it might be 5,000 tons.
Got it.
When we say this market size, it is a net glass, and when we discuss the capacity, that is a gross glass. So when I say India has, or we have 1,000 ton capacity, that can give about 650 ton net glass.
Understood.
And, like that. So the 5,000 ton net will require the capacity to be almost 8,000 tons, or like that.
Understood. And so what would be the current installed capacity of solar modules in India, if you have any idea on that?
It is supposed to be around 60 gigawatt, 55 to 60 gigawatt.
55 to 60. Got it. Thank you so much, sir. Thank you.
Thank you very much. Ladies and gentlemen, you may press star and 1 to ask a question. Thank you. The next question is from the line of Sharon Nandikur, an individual investor. Please go ahead.
Thanks once again for the opportunity. This is a follow-up question. So, sir, wanted to know, are there any marquee investors, like big names, like they invest in many companies, right? Anyone like that big investor, individual investors approached for long-term investor, or you are working with them, you are trying to get some big marquee investors for long-term investment? This question is from the point of view of investors, especially the retail investors and long-term shareholders who are looking for such big investors for long term, which gives them a confidence as well. So, any update on that?
So, board has just approved the proposal yesterday, and the committee has been appointed to look into this and decide on which instrument and which mechanism to be followed. So, I think it is premature that to discuss this, whether we are looking at marquee investor or not. But of course, it will be welcome. So we will, along with the banker whom we will appoint in next few days, we will have to see what all can be done and what is the right mechanism to say issue the shares of up to 500 crores or whatever amount we can work out. And once we do that, then only we'll be sure whether which is the way we are going.
Sure. And these investors, basically they will be for long term. That's what is planned, right?
Currently we don't know actually, but we will of course welcome the long term investors.
Sure. Okay. Yeah. Thank you.
Thank you very much. The next question is from the line of Karan from Nivesha Investment Advisors. Please go ahead.
Hello, am I audible?
Yes, sir.
Yeah, thanks for the opportunity. I wanted to understand, what would be the cost of producing a solar module in India versus the Chinese players, and what percentage of this cost would be computing for the solar glass that we produce?
So, cost of production of solar module has been undergoing change for last 1 year in a very rapid way. And the cost, which used to be about 25 to 26 cents, has come down to almost probably 17-18 cents in that sense. So the solar prices of solar cell and other items also have gone down in the value chain. So this is a very dynamic situation as of now. And in terms of the solar glass as a percentage to solar module cost, it would be about 10% for a normal conventional module where we use only one glass. And for the glass module, it may be about 14%.
And the percentage cost will be similar for the Chinese and the other modules, right?
Yes, glass because cost is a part of module cost will be similar, yes.
And how would the Chinese module prices would be that significantly lower than the other module produced? The overall module?
No, they will not be significantly different. They will be almost say 4-5% lower probably.
Oh, okay. Great. That would be. Thank you so much and all the very best.
Thank you very much. Ladies and gentlemen, you may press star and 1 to ask a question. A reminder to all the participants, you may press star and 1 to ask a question. The next question is from the line of Bharani Kumar from Avendus Spark Institutional Equities. Please go ahead.
Good evening, gentlemen. Apologies, I just joined a little late. Could you give the realization for the quarter and 9 months for us? Meaning realization per millimeter you would give, right?
Yes, in the call we have mentioned that for the realization, average expected realization has been 102 rupees 40 paisa for the quarter, as compared to 134 rupees for the corresponding quarter last year.
134. Okay. And my second question is more on the modules front. Like, what would be the landed cost of say module when it's domestically procured versus when it's imported? Let's say for what piece and for what piece in that sense if you could.
I think the conventional modules may be selling at about 16 to 17 rupees per watt peak in India, Indian-made modules, and the imported maybe 1 rupee or 2 rupees lower than that.
So when you're telling 1 rupee or 2 rupees lower, if you include the DCD component and all, transportation and all.
Yes, after the duty, yes.
Okay. And what would be the realization somebody exporting would be getting compared to this?
Module export, we don't have right numbers, but we believe to USA the module exports are at about 26-27 cents. So that would be about 23-24 rupees. I think.
Okay, got it. Okay, that is from my side. All the best. Thank you.
Okay, thank you.
Thank you very much. As there are no further questions, I will now like to hand the conference over to management for closing comments.
Thank you very much for your participation in this investors conference call and for the questions that you have asked. We hope that we have been able to answer your questions to your satisfaction. And till our next report, we sign off now with a thank you.
On behalf of Axis Capital Limited, that concludes this conference. Thank you for joining us, and you may now disconnect your lines. Thank you.